Good morning, everybody. We're starting a few minutes early, and you may have noticed my voice is slightly different. Lori's traveling today. My name's Jason. I'll be filling in for her. It's going to be the same pregame show with a lot less Southern charm and overall charisma. So you're going to have to bear with me here. Starting a few minutes early because CPI data is coming out. The CPI data is related to inflation, and it's going to give us an idea of what the economy is going to be doing, but most importantly, what the market is going to be doing. Lori has given us 3 different scenarios. And each of these is going to, well, one of these is going to come into play in about 3 minutes when the data is released. So it's going to be a really volatile day. Be careful with your positions and just expect the most likely outcome being a lot of back and forth, a lot of volume, and a lot of shakeups. So there's 3 different scenarios that we're looking at. One, if it's a great number for the economy, inflation is down, or they way overestimated it. Unfortunately, that is going to be bad for the stock market because it is going to impact a lot of tech stocks, indices like QQQ, the tech companies, and overall economy. Although we'll be doing better, it's not as great for stocks. If it's a slight miss, that's probably our best outcome. What that means is we're more or less on track with what we were trying to do. And remember, that is what the market is doing. It is trying to estimate what the truth, the universal price, whatever you want to call it. The market is representative of what it feels is the true value and true scale and true impact point of the economy. So when it is told that it is deviating away from that, we get into volatility. If it's a slight miss, that is good. It means the market is on point. It is right where it's supposed to be. We won't expect a huge amount of volatility. People on both sides are still preparing for this volatility, however. Number 3, if it's a big miss, it's not great because the economy is not going to be doing well. So overall, long term, it's going to be bearish for us. So those are our 3 scenarios. We should be getting that CDI or CPI data relatively soon. I believe it comes out, excuse me, in about 2 or 3 minutes. I've got a little bit of a cough today, so I'm going to do my best to mute myself if I feel a bit of an attack coming on. But that is what we're preparing for as we head into the day. The actual show should kick off right about when that data is released. So until then, I'll say some hellos. Hey, Dragon. Glad to see you around as always. Captain Tony, George, Chadbad, Brett, Benjamin, Cbiro. I don't even know how to say that one. CB Row HT. Love you too, brother. Kyle Richard Luciano. Cinderella Diamond. I gotta give name of the day to Luciano Gabella. That just sounds awesome, doesn't it? Okay, let's go check our news sources, see if we've got anything for our inflation numbers. It's supposed to be coming out right about now. And we're starting to see some volatility showing up in the SPX. So let's go to the 2-minute time frame. In fact, before we do that, why don't we start right away on the SPX and get an idea of what we're expecting. So when we did our hourly setup, and this is the time frame that I'm paying most attention to today, we are trending down pre-market, which means the market overall is a little bit bearish and just leaning ever so slightly that way. On the daily time frame, if you've been watching SPY, we've been going sideways for most of the day. Yesterday traded relatively sideways, almost like an inside day, even though it was only QQQ that was having an inside day. Initial reaction to whatever these numbers are is pretty muted, but bearish so far. We're below a 42.12 support on the SPX futures. Our next support is 42.07. Below that, we got a long ways to go down to 41.85. So if we breach 42.07, we're going to be looking for oversold exhaustion. And we're already oversold in the hourly time frame, so we're approaching that 42.07 number now. So let's go into our numbers. Jobless claims are out. Looking for that CDI data. Don't see anything posted yet, so it must be just a reaction to the jobs numbers. Overall, relatively muted so far. So that is what we're looking for SPX. Ideally, on the daily time frame, we would like to see a little bit of a higher low here. Hold this hourly support, have the bulls come back up and set a overall daily higher low right above our EMA 12. Notice where we just bounced off there, 42.08 on the daily time frame. Go back to our hourly time frame. Our low on this candlestick, 42.07.9. So we're right in the area of our EMA 26. That's a nice place for us to bounce. All right, so CPI data for May. Actual release data 0.06%, expected 0.4, prior 0.08. That's not bad. That's the near miss. It is better than last time. It's improving. It's a little bit more than we expected, but not as bad as it could have been. So this is a good thing. It's relatively sideways. That's my interpretation anyway. So let's see what the market does with this data with a bounce off of that daily EMA 12. Do a 5-minute time frame, looking for that volume. Here it is. I love volume. Love watching volume. It's such a huge part of trading, especially if you can dial right down into the microscopic 15-second time frames and getting a real idea and trying to find those moments when the market shifts, when you see that big pump in volume on a particular stock, or even better, when you're looking for a trend change and you see the price come down and you see volume just snap, and then we change course. I love it. CPI core data, actual 0.7, expected 0.4, prior 0.09. So again, near miss. It seems that the market has pretty much stayed the course. It is doing what we expected, which I think so far is going to be the best data. Not a fundamental guy, not an economist by any means. I play the charts, and that's all I know. So I am relying on my own interpretation that, hey, right in the middle of the range, that's not so bad. We're not massively under, we're not massively over. Good thing. Let's go back to our YouTube. Okay. All right, so the initial data is out. Good. We've got our hourly levels. We've talked about SPX. Let's go look at Nasdaq. Nasdaq was a little bit weaker to open the day. We're looking at NAS 100 futures on TradingView. We lost our 13,744 support on the hourly time frame. Yesterday we were trading on an inside day, so we've broken that bearish. What we've done with that since is we have, let's zoom in. We've broken this low, our inside day low, and we've hit our target, which is a previous day's low. So we've done the work on the part of the bear. So we're now looking to bounce off of our EMA 12, as we are so far doing on the SPX, and we're trying to get back to an hourly trend change for the bulls. What we need to do here is get back up above 13,840. Apologies. I'm going to sneak away for that. I'm going to try and save you from the sounds of coughing. No one wants that sound in a hot mic. Hourly support below 1374. 13,693. Resistance for the hourly trend changes. This is what we need to see for the bulls happen, is to come back up above 13,840 and get an hourly higher low, and then continue to go sideways. What that is going to do actually for the daily time frame is give us a nice tight range and ideally get us that daily higher low that we desperately need to get QQQ and the tech sector and the Nasdaq floating back up to the bull side. Nice little pop from our SPX futures. We're right back on track where we were. Remember where the market expected us to be. They did a good job of estimating the true universal price. I always imagine the true universal price looks similar to a moving average, but what it means to me is that the market is always trying to obtain what it believes the market price to be. We get above it, we get to extend it, we come back down. And that is why we get these trends and these highs and lows. Still working on that indicator, folks. I'm not sure I'm ever going to be able to put that universal price indicator in there. But we can see when it happens, when we have these sharp deviations and we're oversold, and it's like a magnet. The market pulls the price back up to where it believes the price should be. But unfortunately, the market gets excited and it overshoots, so it get overbought. And then the price has to come back down in order to compensate for that excitement. And then fear sets in and it goes back and forth, and you never really know where the true market price is. Super effective collectibles. What about cardboard markets? Still bullish on Pokemon. Bearish on Magic. I don't know. I think green lands are going to be the new hot thing for 2022. So keep an eye on those. I think Stompy's going to be back. And I'd love to see the Eldrazi make an appearance in the next set. Super bullish on Eldrazi. Let's go. We've done our SPX, did our Nasdaq. Let's take a look at the DGI. So DGI futures a little bit more toward the QQQ side of things. We've got our 34,000. Let me get rid of those notifications. We're coming up, or probably have breached this 34,452 level of support. Just below it now. Our next support is 34,334 and then 34,266. Don't like these big old numbers. I like my give me 3 numbers. I'm comfortable with about 3 numbers at a time. Right now, we have 50-minute bears in control, probably getting close to 15-minute oversold. There it is, looking for a nice little healthy bounce, and ideally a trend change. We'd like to see the hourly bulls come back up and change the hourly trend, just like the Nasdaq. We're looking for that breach and that hourly higher low over 34,665. Anything less than that is going to be an hourly downtrend confirmation, and we're to be looking for resist or support check at 34,334. IWM, somewhat similar situation. Hourly time frame is ever so slightly bearish. We have a 15-minute downtrend, looking for the low of day actually from June 8th to act as support. We're coming up against that right now. Same idea. We would like to see this set as a 4-hour and hourly higher low, and bulls resume control. Back to our SPX, still trying to digest this data, still going relatively sideways. Now, if you remove this candlestick, this looks just fine, right? We're still in this range that we have been trading in, and we need to get ourselves some sort of trend. Yesterday, on QQQ and SPY and many other names, even the Reddit stocks, who are known for their high volatility right now, it was relatively flat. And that was because it was a non-constructive day. What we're looking for is SPY and QQQ and all of these indices and stocks to go back from having several days of being non-constructive to having a constructive day, which means we want to get some trends going, and those trends become the foundation for our overall strength in the market and our entry points, which makes technical analysis really effective. So, quick recap. SPX so far absorbing that news. Nasdaq was bearish, trying to get that hourly higher low and hourly trend change. Same for DGI and IWM. So right now it looks like SPY and the SPX 500 is the strongest indices. So we'll be paying close attention to that and seeing if these other ones are going to become a little bit of a laggard, follow suit. Let me check in the old Slack there. Chat. Good enough. All right, oil, 4-hour time frame. This is the dominant time frame. It is not going to be our hourly because we are losing these 4-hour higher lows. Here it is. Overall, we've got ourselves an ever so slight wedge. I tried to draw this as a channel for you guys, but it just doesn't work. What that means for me is that we are getting overbought. And we only need to go to the daily time frame to see that we are indeed close to overbought right here on the daily. Our RSI is 68, and we have several days of bullish advance. So what we're looking for is going to be some consolidation on the daily time frame and a little bit of a weekly higher low at some point. Until that actually happens, bulls are in complete control, and we're going to be looking for them to continue that control and waiting for evidence of weakness. We do that by watching the hourly time frame, the 4-hour time frame, and we'll be looking for a breach of this channel. Right now, bulls in control, very happy, looking for a higher high over 70.60, watching our trend line for resistance. If you want to take a look at that and draw it out for yourselves, all I'm doing is connecting the tops of my green candlesticks and giving myself a trend line to work with. That is how I do it. Bottoms are tops of my greens, bottoms of my reds, using mid-range data. You never really want to use the most recent data because you're just going to force fit something into a pattern that may not exist. Okay? Got to be careful with that. Natural gas key resistance, $3.20. Bulls in control. That's the daily time frame. We go to the 15-minute time frame. A little bit choppy here, but of course we're expecting a little bit of volatility in all the markets today. Trying to get over this $3.17 area of resistance. Have just done it now. We want to close over that level. We want to show that strength. So nice for the bulls to clear a level. But look at the volume difference here. This is high volume. We got there yesterday. Now we need to see more volume as we breach this level. We'll see if that picks up. If we can get a volume break and back test and confirmation on good volume, it's going to be a lot better than this little poke above and fall back below. This is still an area of resistance for us to look at. Lori did want me to share a couple of tickers with you today. Her King of the Mountain trade, RH. So Lori loves these big volume movers. She likes these big, I don't want to say big gaps. They often gap, but they're gapping with a volume. So when we have a gap with a volume and it has a fundamental catalyst, in this case earnings, it becomes a new range that we need to pay attention to. We don't really abandon all of the previous data, but we do treat it as an event. An event play carves out its own recent areas of support and resistance. We use a lot of pre-market. So it basically means we've arrived at a new destination and we need to figure out what our home range is. And then we're going to build supports and resistance in the short-term timeframes to expand out and seek out new territory, new price action. So we can take a look at this. There's a volume yesterday. Pre-market is $6.66. So I like that. That's a nice and friendly number, right? Here we are opening above our key resistance points. We have mediocre volume so far, but we are well positioned for a very excited bull setup. What I'm going to be watching for is bulls to hold over top of this area of resistance. Now going to become an area of support. We needed to develop those. Wow, that was like 3 da-da-das. Pretty impressive. I think the coffee's kicking in, friends. We're looking for the bulls to hold an area of support. It's fine to get over top of it, but until you validate that support and resistance break with volume and backtest, it doesn't really exist. It exists as a potentiality, and all we have so far is potentiality. But I'll be watching this one for a lot of volume. 5-minute time frame. We can see we're creeping up to the upside. What we want to do is open strong. We want to see the bulls push. We want to see the bears attack, but not be able to breach this area of support, and then from there develop a new pattern. That is the best case scenario for us. If we open below backtest as a resistance, then we're in a little bit more trouble. All right. All right, let's see. Just checking in on chat. Eric Snyder, the discussion of cardboard markets made your day brighter. You know what? One of my favorite things to do with these streams is to go on tangents that are completely unrelated to the market. Ask anyone in the chart, guys. So I'm gonna treat you to one. I used to love trading or playing Magic, and then I had kids, and all of my Magic cardboard crack money went to them. So I still have my sets, but I am so out of the loop. I'm in a world of trouble. It's gonna be one of those things where I keep them in a box for 40 years, and then go sell them to some other power nerds. We'll high five together and remember the good times. All right, another setup. Lori, I don't know if she wanted me to share it with you, but I'm going to share it with you anyway because it's going to be a good learning opportunity. OCGN. If RH is the king of the mountain trade, OCGN is going to be the dumpster fire trade, and you should be watching this just to learn from it. It's almost the opposite of RH. We're capping down. I don't know if there's news. I'm assuming there is. OCGN. Don't really know what they do. Doesn't really matter. That's the beautiful part about being a pure analyst. I have no idea what a lot of these companies do, and it doesn't matter because I have the charts, and if I have support and resistance levels and I have technical setups that work for me that I recognize that I'm experienced in and that I know I can benefit from. I don't know if they make balloons or they make cars. It doesn't matter. All of this gets cooked into our charts, just like when we looked at SPX and we can see the sideways range, we can see the back and forth. We can interpret this. We can understand the psychology that's behind these patterns and benefit from them. So OCGN, that's our dumpster fire. We're gapping down. Our pre-market is at 666. Let's go take a look at the 5-minute time frame to see what that looks like. Yeah. So here is that pre-market drop, 473. Look at that. What is 100% range in pre-market? Bulls and bears actually have experimented in both directions. So a lot of times in pre-market, we get these big spikes. So what we can interpret that as are individuals or institutions testing the price levels. They can put out like a probe to see how far they're able to push the price. And in pre-market, generally, you don't need a ton of volume to do that. Over here, we can see our volume is really quite low compared to our regular action. But look at how much pre-market volume is actually occurring. It's actually more than the vast majority of the previous day's data. And it's actually higher than the morning and midday of June 8th. So there's a lot of volume and a lot of shares being traded here. So again, dumpster fire, a lot of potential in both directions, a lot of interest and a lot of volume coming into OCGN. Same idea, but inverse of RH. We're going to be looking for some setups. We're going to be looking for our new home to be formed here. And we're going to be looking for 5-minute patterns. And we're going to be looking for those to break with consistency, volume, and commitment. We don't get follow through. It is a problem. Follow through, what does that mean? Well, that's a good question. If we have a pattern and we're looking, say, for bears to break 473, we want to take a short position on that break of 473 because that's our pre-market low. What happens if we get down here, we bounce off 473, we go under, we come right back up? That is a complete lack of momentum and strength on the part of the bears. We've lost a key level. They should be able to capitalize on that. If we only dip below and come right back up, that is a vote of confidence in the other direction. Why? Because the bears are not here to apply the pressure that we expect them to apply. If you only bring one friend to a tug of war and you got 40 friends, or let me correct that. If someone, the opposing side, the enemy in the tug of war battle, only brings one guy and you've got 30, and he tugs on that rope and all he's got is just one little dip below 473, he's in trouble. Okay, that's that. Let's see. Bitcoin. Forgot to do Bitcoin early this morning. Hourly time frame. Bitcoin's actually looking half decent here. $40,000 is not outside the realm of possibility for the next 48 hours. Bulls in the daily time frame are looking quite good. We're still in a daily downtrend though. So we need to get over top of 39,489. So why don't we just get 40,000, get it out of the way and change that daily trend? After that, we're going to be looking for daily higher low. So a little bit of consolidation is going to be just fine. The hourly time frame is not the dominant time frame here. We can see that we have this hourly 50-minute downtrend. We bounced off our EMA 8. Our 4-hour time frame is king. We're looking for 4-hour higher lows. Bulls in control right now. 5-minute time frame hitting toward the upside. And it looks like we got ourselves an extended little 15-minute channel here. And what we need to do is get a 50-minute higher low and higher high over 38,425. We're going to be in good shape. Ethereum, not quite as strong. Hourly time frame still in an hourly downtrend. A lot of volatility here. So if we go to 4-hour, we probably got ourselves an outside bar. There we go. So just 4-hour outside bar showing that lack of commitment, lack of direction. And hopefully we can get some Bitcoin strength and Ethereum to start taking a leadership position again. 5-minute time frame is relatively similar to our Bitcoin. So maybe that is happening now. Ooh, nice little move on Bitcoin. Nice to see that little volume. I don't know how I missed that. Looked at it less than 2 minutes ago, but nice little breach there. Okay. Flaccid dip below 473 is the preferred term. I apologize, Brett. I had no idea that you had such an outstanding and disgusting term for that. God, no. Thanks, Brett. Thank you for that. Okay. Let's see. Maybe a couple minutes left. Are there any requests? I got to do a couple ticker requests, and then I'm going to jump off because pregame show a chart, guys. We do this every morning in a much more detailed way. So when you're part of the Chart Guys community, we do a whiteboard where we post all of the key levels for all of the indices and major sectors. We talk about all these support levels that we're looking for, what we expect, and we have a brief little summary of what we expect SPY to do, for example. And it's an expansion on the free videos that we put out every night, and we're getting ready for the morning. Then we go through all of those indices, talk about the potentialities and most likely outcomes and scenarios, and then we really dig into individual stocks. So if you're trading Zoom, you want to understand what our perception on Zoom is, we can talk about it. All right, so I'm going to do Netflix and Wish because that's all the time we have for today. Our first request is for CLF, for Luciano. And Luciano Gabello, how can you deny that guy? I may get into trouble with a certain group of individuals who like to be organized if I don't help Luciano Gabello. CLF. I gotta do CLF and Netflix. We'll see how much time we have there. Oh boy. Okay, that's big volume. That's nice. The only thing I don't like about this big volume is the upper wick. So when we have volume and momentum and we have a Marabuzzo close meaning our closing price is right at the high of the day, that shows us maximum volume. We don't want to see too much profit taking into the end of the day unless it is healthy consolidation and we're not playing breakout, we're playing trend. So the difference between those is best exemplified when you're talking about big breakouts on, say, a 5-minute time frame. Let's say we have a huge resistance and we finally get over top of it and the price just keeps going. And it doesn't stop, barely consolidates, and bulls maintain full pressure. That is a complete momentum trade, and you want that to end at the high of the day. Then you get our big candlestick like this that shows us that the bulls have that momentum. And that is important because it gives us big potential for gap up follow through. Now, the opposite of that is going to be consolidation. So let's say we have an hourly trend, we come up and we start to come back down because what we're trying to do is set these hourly trends like this. If we have a candlestick that looks like this and our action, the body captures this part of it, where the price can come up and then comes back down and sets an hourly higher low somewhere else, we end up with this candlestick shape. So if that's what we're looking at on a larger trend, that's not a bad thing. But when we have volume like this, it's more looking like that momentum push and a little bit of profit taking. As always, we need to investigate what's happening beneath the scenes here. Hourly time frame, or I should say the daily time frame, is very strong. A weekly time frame just hit higher highs, so we need to be open to the idea that it's time to consolidate. So we'll be looking for that to start, because that is what we expect. If we go, let's try this. I've never tried moving it back and forth before. But if we do this and just move the price over like that, that's sort of what we expect to see, okay? It's going to fit this bill if things are going to continue. So we're looking for evidence of that. Let's go right to the hourly time frame. What we see here is a nice hourly higher low after that brief consolidation into after hours. So that is the level to hold. We'll get rid of, actually, we'll keep that guy. Let's get rid of him. And then from now, it's going to be just a 5-minute time frame, maintaining these 5-minute higher lows. The big key for me is going to be the loss of 248 and 267. If we lose that, we're looking for daily consolidation, because that is a key afternoon level for us and is a key hourly level. Lose those hourly levels, we're looking at 4-hour and daily consolidation. 5-minute time frame is bullish. Best case scenario for the bulls is going to be a cascade open and a weakness, 5-minute and 2-minute oversold bounce against this key support. I would be looking to play that into a bounce, scale out of my bounce, and probably just take half. So that's a standard play for the Chart Guys community. Looking for that fade, looking for those oversold conditions as all that profit taking comes into play. Get that bounce right against support. And as soon as we get up to our EMA 12, which is going to be sloping down something like that, we're going to exit half our position, and then set the rest at break even and let the market decide what it wants to do from there. Lock in half profits, stress-free day. I love stress-free trading. That is exactly my goal for trading, is to not have to worry about it. And when I am able to get into a trade with a nice technical setup, see the price go the way that I want it to, I feel like a wizard, first of all, because I feel like I'm controlling the markets, which is fun, Jedi markets. But when I'm able to take some profits and set my stop to break even and know that no matter what happens, I have a profitable trade, it makes the day perfect. I can move on from that and don't have to think about it. The other day I did that, went for a walk, went to feed my pigs, check the animals. All right, I spent too much time on this one, and I did promise one more. Let's take a look at Netflix. Hey, Lori. Lori checking in from the airplane. That's pretty impressive technology, huh? No, I can never get the internet to work on my airplane. Always seems to break, or they want $4,000 per minute. I wonder if Starlink would work. Is there going to be like a mobile Starlink? That'd be cool. Okay. Netflix daily time frame 44.97. We're seeing that weakness in our Nasdaq dragging our Netflix down. And to be honest, Netflix doesn't look that great. We need to hold this 478.54, 478.63 level and try to get a little bit of a bounce swing on the daily time frame. We are in a daily downtrend, so the most likely outcome is going to be a break of that level. It's just not looking as healthy as it should. Weekly time frame, while the monthly might be consolidating, we've lost our weekly uptrend. Best case scenario for the bulls longer term is to break back above 511.76. If we're able to do that, we have a chance to salvage this weekly trend. Daily time frame, we need that daily higher low. So short-term momentum is for the bears. And let's go right to the 5-minute. Actually, the hourly is going to give us the most insight. Hourly lower lows, getting close to hourly oversold. We may have just dipped into there at the low of yesterday. Pretty weak bounce to follow. So we're going to be bearish on Netflix today just because we're expecting that downside to continue. Not a lot of data pre-market. And our resistances are quite far away, even on the 5-minute time frame. I would pay a little bit of attention to 486.95 just because that was the high of our afternoon, 490.48. And then we're going to have yesterday's low of 484.65. Unfortunately, bears have made quite a bit of an advance here. We haven't gapped, so I doubt they're exhausted. They do have a lot of pressure behind them. If I'm looking to play a bullish entry, I want to at least see the 5-minute time frame consolidate into a reversal pattern And really what I'm doing with that is allowing the bulls and bears to fight it out and develop something that I can use as a stop loss level if I believe it's going to be a constructive day and actually have a useful pattern that's going to get me to the upside. Best thing for me on these days is a high open, a response, and then a tightening range, which becomes a nice little wedge right above a key support level. Let's try to draw that wedge better. Into key support level into a break. That's what I would love to see. Total speculation on NFLX, but Bear's definitely in control right now to the downside. All right, we got to go. Dan is going to be, or no, Dinsy's going to be live in the Chart Guys community in 3 minutes. She's going to be doing somewhat similar analysis, but the best part of it is if you have individual tickers like Netflix, like TLRY, like Ride, all of these things you guys are talking about, POW, Wish, whatever tickers you are trading and interested in and you want an outside perspective on, just double check your own analysis. That's what we do at Chart Guys. We take a look at it, give you our feedback, and then the entire community all day is scanning the markets and watching and sharing the most effective technical setups that we can find. We are educating each other. We are sharing trade setups, and we are having what's the word? I've lost it. We're helping each other. That's what the whole point of the community is. All right, that's it for me, guys. I will maybe talk to you tomorrow. I'm not sure what the plan is yet for the pregame show, but good luck out there. If you have any questions, feel free to reach out to me, support@chartguys.com, and hopefully I'll talk to you soon.